Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets.
Hey guys, what's up? Another episode of Bodies and Wicks. Freeze frame. No, I'm just kidding. Anyway, what's going on? It's Ted. I have my little screen over here that says Bodies and Wicks behind me. Fully productive production set, as you can see. I got a pillow that I can probably put right here to make it look a little bit more homely. I got my little, as you can tell, this is a very professional production set that I do my little spiel from. Anyway, if you haven't been to or haven't seen anything from Bodies and Wicks yet, my name is Ted, and what I do is I generally analyze financial charts. Usually what I do is I'll go through and analyze, and I'll try to give a prediction of what's going to happen. Lately, I've been doing a little bit more informational things, and trying to get you guys involved and seeing what you can do with the information that I give you. Right. So today's topic and the ongoing topic for this week has been the dollar. All right. So the dollar. What does it mean for everything else, considering the dollar runs the world, right? So the dollar is the world's currency, as I like to say. It's the reserve currency. It was the reserve currency, it's way back when, the petrodollar. They call it the petrodollar for a reason, because you can only buy petroleum in the form of a dollar. So if you're in Saudi Arabia and you want to buy petroleum from Russia, it has to get exchanged to the dollar first before you can buy it. And that's what keeps the dollar going. Is that coming to an end soon? Whew, that's a good question. Your guess is as good as mine on that one. And that I think that's a question that a lot of people are having. Like, what, the same thing goes for, I think, many other commodities as well. But right now, I think another big thing is crypto. What does the dollar mean for the crypto market? Because the dollar is going to have an impact on the crypto market if it already hasn't. And for those of you that have been following along with my videos, I have shown you some things that can be quite scary to the crypto market. The people that do have their hands in the dollar also have their hands in the crypto market, and they can manipulate the crypto market. Believe it or not, everybody thinks the crypto market is this kind of rogue market that kind of operates on its own, and it gets around the government. But the question is, what happens if the government can put all their money in the crypto market, right? And then all of a sudden the government says, well, now you have to have all your dollars in crypto dollars, and then the government starts putting out stimulus checks in the form of crypto. What can the government devalue crypto? The answer to all these questions is yes. These things can happen. So to think that just because if we can get around the banking system doesn't mean that the banking system can get inside of the crypto, right? So I think that's one thing we need to think about moving forward. And one of the things I want to show you that I have shown before, and I'm going to do it again because I keep looking at this and it keeps getting more and more interesting the more I look at it. And it has to do with, if you go to barchart.com, first of all, what I'd like to say, if you like the content, I subscribe. If you could just give the video a like. I hate to be a beggar for likes, but anybody that scrolls through, any kind of new content and they don't see a like on it, they're gonna be like, eh. But if they do see something that has a like on it, they're more than likely to watch the video. So if you could give it a like. There's also a subscribe button down at the bottom. If you could subscribe, and if you really like the content, hit the notification bell. Who knows? You might get I try to do these videos. Been doing them more here lately. I took a break for a minute, but now I've been focusing on more informational stuff. So that's why I've been doing more videos rather than going through charts and being like, I think this is gonna do this, and I think this is gonna do that. Instead, I've been trying to do a little bit more informational stuff. So anyway, what I want to do now is head on over to barchart.com, right? And what I have brought up is Bitcoin futures. As you can see right here, a Bitcoin CME futures, December 20. Yes, Bitcoin does have futures. All right, so first, how do you get here? Barchart.com. You come up here, you go to select a commodity. You can select a plethora of things, anything from wheat, corn, seed, soybeans, to I didn't know this thing was such a thing, rapeseed. You can do the 10-year long gilt. You can do ice heating oil. You can do all kinds of things that you can select from as far as a commodity. However, I chose Bitcoin futures, right? After you choose Bitcoin futures, you want to select the first contract, right? The very top one that says December, right? And then it gives you some statistics about like what's going on with the contract size, margin, maintenance, point value, things like that. Over here you have a small chart, right? You want to click full chart. It says strong buy, which is interesting to me. It says strong buy. Strong buy to barchart.com. Probably a lot of people have invested interest in this. Not for sure if it's a strong buy. I do think there's a good interest to buy Bitcoin, of course. Strong buy right now. I'm gonna get to that. So right now, I'm choosing the candlestick. I'm gonna go candlestick open to close, so we can kind of get a better look at the candlesticks. These are basically, I think, the days. So as the days have gone on, these have been moving. So down here you also have a volume indicator, right? And this purple line indicates open interest. So if you click on the volume here, it'll show you up, down, unchanged, and then the purple is open interest, right? So that's the interest rate in which you are getting whenever you purchase the future. Now, I think it was a couple days ago, whenever we saw this big drop, right? I was looking at this and the interest was going way up, but we weren't seeing any change in it. And I was saying, we're probably going to see a drop. Because the interest, anytime you see an interest rate, jump more than 20% is when you're going to see a drop. Well, that's when all of a sudden we saw, I moved it a little bit too much. That's when all of a sudden we saw this red candle, right? We saw this red candle just come right down. And a lot of people were going, oh no, it was because it was nearing the top. It was because it was nearing the resistance. I mean, are you sure about that? Because the interest rate was going way up. I'm pretty sure people stopped buying it because the interest rate was going up and nobody wanted to pay the interest. And also it was getting nearly toward the top, so people started selling, Yeah, there's a multitude of factors that come into play. So always watch it, but now that this open interest has rounded off, it's rounded off and it looks like it started to go down. Whenever it starts to go down, that's when you're going to see a little bit of a pickup in the buying. Another thing I want to point out is this indicator down here. I was taught to me by Inner Circle Trader. If you don't know who he is, he's if you go to my channel and you look at like the you know, what's it called, feature channels, I do have him as my top one because I think his information is probably the best out there. This is where I learned this information from. If you go to COTO, okay, so this is commitment to traders. You have your commercial speculators, you have your large speculators, small speculators, right? So your commercial speculators are your people with the largest bank accounts that you can imagine. So that would be things like such like the Bank of England, Deutsche Bank, JP Morgan, things like that. So believe it or not, those people do have a hand in the Bitcoin game. Now, they don't have a lot, and I'll get to that in a second as to why I know they don't have a lot, but they do have something, they do have a hand in this game. Basically what this chart means is that if this is going up, that means people are going long. If you're new to the trading game, long means to buy, right? If they're below this line down here, if it's negative, that means they're shorting it. If they're shorting it, that means they're selling it. In the trading game, you can do both. You can buy and sell. You don't have to buy and own anything to sell. You can just strictly sell. If you don't know this, you can download the MetaTrader 4 app and play around with it as a demo account. And I would suggest everybody do that because trading, you can make way more money trading, and not just trading options. Options is primarily for the stocks, things like that. Trading can be done with currencies and things like that. You can also trade stocks too. I literally have, you know, I'm MetaTrader 4. I have a bunch of stocks that I can trade, so I can put, you know, 2 lots down and sell Apple, you know, whenever it gets to a high, and if Apple drops $2, I make $40, right? And I would only have to have an account of about $500 to do that. So if you really want to make money quick, the answer is in trading. It's not in investing. It's not in buying a bunch of Bitcoin and then selling it when it gets really high, because that's I mean, you know, that you should be investing instead if you're going to be doing that. If you're trying to make huge chunks of money, you know, with, you know, decent gains, your best odds are to be trading. And there's a ways to trade and there's a ways to invest. And they're completely different games. But anyway, back to my point here about this commitment to traders. Now you can see with the commercial traders right here, there's a little bit of a jump, right? There's a little bit of a jump from the commercial traders going from, what was it before, -70 contracts to up to 261 contracts. So that is a jump of about 300 contracts. I don't know if that's in the thousands. I'm pretty sure it is something like that. You can see it jump, right? So it jumps to that sometime in between here and here. We don't know the definite time, but sometime in between November 3rd and October 27th, it made that jump. That's the only thing I don't like about the commitment to traders. It doesn't give you the exact date. It gives you the range in which it did it. My guess is going to be whenever it fell to, I'm going to move this a little bit so we can see. It fell to this level here, you know, it made this high, and then it fell down to here. I'm going to guess this is when everybody, or at least not everybody, but at least the commercial traders put in their longs. What was the blue again? I think that was the speculation traders, right? Or the large speculations. Yes, the large speculators. So large speculators, actually no, those guys went short. What a bunch of dumbasses. The small speculators were smart and went along. Usually it's the opposite. Usually what you see is the commercial traders usually know what they're doing, and they're ahead of the curve. You have the large that are almost diametrically opposed because they really don't know what they're doing, And the large speculators are more like your hedge fund managers, people that are employed by like, the people that are supposed to take care of people's 401ks and things like that. And your small speculators are people like you and me, right? People with small bank accounts. These people are designated by law to basically show, what they're investing in as far as futures are concerned. So they all made this long, right? So they did get this long. So it goes up, right? And for some reason they decide to add in shorts right here. And this is something I don't understand. So it's going long, but they add in shorts as it's continuing going along. Right, so I'm guessing they're thinking it's probably gonna go down. Bitcoin probably shouldn't be going up this high. The commercial speculators probably aren't that savvy yet at the Bitcoin market, and that's why they don't know how to trade it very well. But they do know how to trade it somewhat, in the fact that they did go long at the right point. They could have kept it long, they could have kept adding it long, and generally you would see probably somewhere around here is when they start adding their shorts, just like these guys did, right? So the funny thing is that your small speculators are actually the smarter ones in this game, right? So these are the guys that are probably, they added their shorts probably a little bit too short, and your larger speculators actually made the smarter move. They added more longs here, and they didn't get short until here. This would make sense to get short right around here, because it didn't get up too much higher. It made this dip, so they would have made some profit here, right? So anyways, that's what I just wanted to go over with the commercial and the large speculators, small speculators. With the commitment to traders, keep an eye, if you can, if you're especially in the crypto market. A lot of things follow follow Bitcoin. So if you watch this and you want to see what I would say probably watch the large speculators. It seems like they're more intact with how to trade the Bitcoin market than the others do. Generally, it's the commercials, but commercials aren't too savvy just yet on how to trade the Bitcoin market. And also watch this the open interest rate as well. Now, I want to show you something different that shows that there is a lot of large speculators in different markets. So let's go to the euro for I like the euro to try to show this. Actually, you know what? Let's do the British pound, because the British pound can be a little bit all over the place. So instead, let's go to the British pound, and let's go to the nearest British pound, the December one. No, I don't want to sign up for ad free. Let's go to full chart. All right, so now see, and as you can see down here at the commitment of traders, this is all over the place, right? So I remember the red was the commercial speculators. As you can see, they were going short, and even though as it was going long, they were still going short. They were adding longs, right? But they were still going short here. Here they went long here. And why did they go long here? Well, because it went up here. Here, let's bring this, smush this a little bit closer together, and bring it down a little bit. Well, we can kind of see everything in one screen, hopefully. All right, so as you can see, commercial speculators, and now they go short, right? So now they went short. Well, why did they go short here? Is because of this drop, right? So they were probably anticipating this drop. So they go short. It goes sideways for a little bit. Maybe, they also added in some longs here, so it goes up a little bit. They made some money off that. Go short again. Boom. There's their drop that they wanted. As soon as they got their drop that they wanted, now they started adding in their longs. Well, as they start adding in their longs, what does it do? It goes long. Here is a big long jump. So at this point, they're anticipating it to go very, very long, right? And at that point, considering from that point on, it has gone long. Of course, they did add some shorts in here as well, because it did have some drops, but, overall, they expected it to go long. Now, the people that did the opposite were your large speculators, right? Your hedge fund managers, your people like that. They went the opposite route. I think they were trying to go with the flow, right? So they added in shorts. Why they added in shorts? They went long. They added in longs. Why they had longs? It went short. So these people that you're supposed to trust with your 401ks and stuff like that, these guys are idiots. You should be doing this yourself and teaching yourself how to do this. And that's all I got to say about that. Now, as far as the open interest rate is concerned, as you can see, as it is getting lower and lower, you can probably see it, but more than likely it's going to be buying and buying, because people are more and more willing to pay for less interest. So as the interest is going lower, you're going to get higher and higher and higher, because that's what people are willing to pay for. People aren't willing to pay for high interest rates. So as the interest rates go down, people who are buying, it goes up. So that's how the commitment of traders and the volume works together. So that's my little rant on that. So now the next thing I want to talk about is the dollar. So actually, I want to go here, right? I want to go to the daily, because a week ago, right? So a week ago, if we're on the daily, we're on Friday right now, technically. 1, 2, 3, 4, 5, right? So this has been the whole week. 1, 2, 3, 4, Monday. So it was around this time, right? At the end of the day on Friday, I was like, we are at a good resistance point. I was looking at the euro, I was looking at the pound, and I was like, you know what, it's probably going to bounce back and go this way, because we're at a resistance point. And so I held sells on both the pound and the euro, thinking that this was going to go this way, and that I would be in good position from holding over the weekend to do that. And lo and behold, I was wrong. Yeah, I know. I was definitely wrong on that. To be honest, I just didn't expect the dollar to make such a dramatic drop like this. Oops, didn't mean to do that. I don't know why this is here. Let me delete that. So, and the reason there's so many lines on here is because that's what I like doing. I like drawing lines to give me an idea, especially to where we were at previously. So we haven't seen levels like this since 2018. So it's been 2 years, right? And we were there for the beginning of the year. Maybe it was a business cycle, right? So we were there from January until April, right? And let's see where we're in December. So late December, mid-December, we're kind of up here. So right now we're a little bit ahead of the curve as to where we were 2 years ago. So maybe this is just a cyclical thing. I don't know. I really doubt that, because if we want to go another 2 years before that, where 2015 we were actually way below that. So 2014, so as of 2015, 2016, we were actually here, let's just level it out so we can kind of get a good idea of what we're looking at. And why do we have this here? I don't know. I think I don't know what that was, so let's just get rid of it. So we had a pretty good dollar, and then all of a sudden it dips, right around here, and then it comes back up. It looks like we were doing good. COVID hits, right? And that's why you see this weird, crazy V shape. And then we were going sideways for a little bit, right? And then all of a sudden it was around June. I remember it. It was around June it started falling, right? And then the month of June, it kind of did a little sideways thing. We thought it was coming back, and then boom, it starts falling in July, right? So then since August, we have been sideways motion, We had a little bit of a comeback, and then it starts falling again. So why do I bring this up? Well, for a couple reasons. For one, we are at some good resistance points, right? We are at some points to where it's getting to, whenever you see this in price action, right? It usually hits something, right, to the left of the chart, right? Something to the left of the chart sparks it to where it says, okay, I've been here before. What do I do now, right? Do I go back the other way? Do I fight through it, right? It's an algorithm. It's a predetermined algorithm, right? This has nothing to do with buying and selling. It kind of does, it kind of doesn't, right? Because you know what, the truth is that if we all came in and we decided we were going to, gather everybody in the world, and everybody in the world was going to sell the dollar, right? Everybody in the world was going to sell the dollar, and we were going to buy it. We were going to buy the pound instead, right? It would not have really any effect on this. It wouldn't. It really wouldn't. It would not have any effect on this whatsoever. I mean, you might see a little bit of an effect, but more than likely what would happen is that it would just kind of go crazy for a little bit. So that's the reason why I say that. The reason why I bring this up is because we are at a critical, support and resistance level. Not only there, but we're also at critical support and resistance levels in other places as well. Number one being Bitcoin, right? So we are at the all-time high for Bitcoin, right? So we had just surpassed the all-time high at Bitcoin on November 30th, right? Or actually, no, it was before that. It was November 24th. They had just passed it, and then it came and dropped down, and then it came back up, and then surpassed it again. We dropped back down, and then just recently, earlier today, we came above it again, right? Now let's flatten it out, right? Now, I'm sorry to say, if you're one of those people that believes in trend lines, I hate to say it, you got some thinking to do. Trend lines may be a guide. They may give you an idea of where things can go. But as a famous person once said, trend lines are meant to be broken, right? So if you think, that this thing is going to do this, and because it's a trend line, and it's going to keep on doing this and this and this forever, you're sadly mistaken. Number one, there's people that do think like this, and because they do think like this, they're going to start buying, right? They're going to start buying right here. It's like, oh God, this thing's going to keep going. The people on the opposite side, there are people on the opposite side of this trade that know this, right? And since they know this, they're going to sell. And they have enough money to sell that what it's going to do, if you don't know anything about trading, you have a starting or a limit buy or a market buy, and then you also have a stop loss. So that's what these things are for. If you ever use TradingView, you have a long and short position, you can kind of gauge, you can kind of put these things out here and put like what your position you want to be, to give yourself an idea of what kind of trade you want to be in. So let's say you're going to put in a long position here, right? In Bitcoin, this is a pretty massive position, right? So let's just say that you buy right there, right? And let's say you really believe in this trend line, so you're only going to risk, right, about as much as that trend line is, right? And that's all you're going to risk. So if it drops below that, right? So once it hits this point, that's your limit buy, and if it drops below this trend line, right, you're going to start going negative, and then boom, you get taken out, and then you lose that money that you placed in that trade. That money goes to the broker, right? And the broker pays the person on the opposite side of that trade, right? So, and this is how it works. So now people know this, right? So what they do is instead is they will sell, and they will sell straight through that, right? That way they know they can take your money, or they can take the money that's in there, and they can pay themselves with it because they can push it down that low. They push it down to a point to where they feel comfortable. It's good enough for them to buy. They can buy 10 times as much as what they had before, even though it took quite a bit for them to sell to get to that point. It doesn't matter. They can still buy up at a cheaper price, right? Right. Another reason why trend lines don't work is because one of the main reasons trend lines happen is because of time and price theory, right? So at specific times, right, there are these things, right, that you can call them, we'll call them blocks, right? There's a famous person that calls these things order blocks, right? So what an order block is basically any kind of candle that moves a certain direction, and the direction after that causes displacement. And that, I'm looking at one right now, and if you see it, you probably know what I'm talking about. There's a couple of them actually, but the one I am thinking of, and I will draw out or put in a box, is right here, right? So this is a down candle, right? And then right after that down candle, boom, it shoots up, right? Causes displacement. So that would be an order block. That means somebody sold down to get a good price. Once they got a good price, they bought it, right? And then it came back up. So let's use some horizontal rays to block these out, right? So let's get rid of this. So now that it caused this displacement, right? Once it comes back down to this candle, right? This is what's called mitigation. So if they were holding a sell somewhere in this area, whoever, usually institutions, and yes, like I said, institutions are involved in Bitcoin, right? Usually institutions do this. They'll put in a massive sell, right? That sell can cause displacement, or can cause the price to drop a little bit, right? Or reprice, I guess you could say. And then they buy, and then once they buy, it reprices up, and then it does whatever it's going to do. This is mainly just, people kind of putting in their money, that they have change in their wallets, or whatever. People seeing that gets high, they want to, take some of it out. But then something happens, and then price starts dropping. Well, it looks like they couldn't get it low enough to where they wanted it to, so the institutions, they got to make it come down to where they're still holding a sell, right? And since they're still holding that sell, it does touch that area to where that sell was. So now they can finally release that sell without losing any money, and then they buy again, right? Unfortunately, they're still holding a sell somewhere in here, right? And this happens over and over and over again, and that's where you get this facade of a trend line, right? Because there's always this displacement, right, of, let's just say it was here, right? So maybe somewhere in here is where that sell was, right? And that they were holding that sell. Once it came back down to that area, they can get rid of that sell, and then they can buy. And then again, it happens over and over and over again, and we can even go down to here and almost do the same thing here. Here you go. Here's a big drop down, and then this really wasn't much of a displacement, but let's just say somebody was holding a sell in here, right? If it was here, and then it comes up, and then it comes back down, they release the sell, and then they buy, right? So the interesting thing that I do see about this is that you do have this candle here, right? This candle here, nothing ever comes down. Well, I mean, it got close enough. Well, maybe it did. Yeah, it did. Okay, so this top of this candle, actually, it did come down. And I was going to say, we may be looking at an area to where it could come down to, but no. The top of this candle, it looks like this is where they probably did have a sell. It caused the displacement. It dropped down really quick. They released the sell, and then they continued on. But maybe this is causing another one. Oh, nope, here it is. Yep, top of this candle. See, as you can see, this is not support and resistance. Support and resistance is a clear cut. If we go back to the dollar, this right here, this is support and resistance, to where if there's a major area to where it's going to cause a lot of slowing down of something, or a rejection of something. That is support and resistance. If we're looking at Bitcoin here, this is not support and resistance. This is mitigation, right? So know the difference between the two. And number two, let's say if we go to the daily chart. Okay, so now we're on to Ethereum, right? So, well, for number one, I guess the whole reason I was doing this is because we were at an area of support and resistance here. I kind of got off on a tangent there for a second on trend lines. Yeah, that should be a whole another subject altogether. Anyways, so now that the dollar is at an area of, I guess you could say, support, and Bitcoin is at an area of resistance, if the dollar is to turn around and Bitcoin is technically priced Bitcoin USD, right? So it's not Bitcoin USDT. There is Bitcoin USDT, but the tether is primarily the dollar, right? So you have Bitcoin, which is Bitcoin versus the US dollar. So if the dollar is going to, here we'll go back to the dollar, right? We see the dollar getting down to, into these areas of support. Which area of support is it going to hit? There's multiple levels of it that could be support, and that's why I have all these different areas marked out. And it looks like it seems to have found one. Maybe it's a temporary one, maybe it's not, I don't know, because tomorrow this could go this way, or it could continue going downwards, right? The question is, what are we going to see from Bitcoin? Are we going to see Bitcoin go up? Are we going to see Bitcoin go down? I believe it's going to be in relation to the dollar. We've seen the dollar go down very, very massively. At the same time, Bitcoin has made a huge rise. So if you think Bitcoin has anything to do with just a bunch of people pumping all of their money into Bitcoin, you could be right. But if anything, it's going to be a bunch of institutions pumping their money into Bitcoin. I know people who put, money into Bitcoin here and there, but with Bitcoin's market cap, and we can go, hold on, I want to say, it might be, here we go, hold on. I want to say I have. Oh, here we go. Here it goes. Total. So this is the total market cap, right? Total market cap, and this is including Bitcoin. So of all the money, it looks like we have 571 $1 billion in the crypto market, and that is including Bitcoin, right? And we, technically, I guess there is no market cap, right? Or if there is a market cap, maybe I don't know too much about the whole crypto market, but the total crypto market cap kind of looks like Bitcoin, to be honest. If you put in altcoins, anything else like that, all of that is in here. If you go to total 2, this is the crypto market that excludes Bitcoin, right? And it is at 210 billion. So that is half of the crypto market is in Bitcoin. More than half of the crypto market is in Bitcoin, right? And so I just wanted to show you that first and foremost. So if we go back to the Bitcoin, and we're going to see this. So I think, some of it could be the fact that, people are putting a lot of money in Bitcoin. But I think another part of it is the fact that the dollar is devaluing, right? The dollar is becoming devalued. And because the dollar is becoming devalued, there's something that of value has to take its place. And I think, Bitcoin could be one of those things, right? Another thing that could be one of those things, and I know people don't want to hear it, I will actually bring it up on a different one. Okay, so this is actually the CRB index. If you don't know the CRB index, you should actually take a look at this every now and then. This is the commodities index. So this is all the different commodities put into an index, and it gives you a general price from this index. The one thing that represents the commodity index actually to a very close thing is going to be the S&P 500 index, believe it or not, because commodities are very, very closely related to the S&P index. Why? Because companies that get their goods, such as, let's say Starbucks is on here, they get cocoa. Cocoa's in the commodities index. If prices are a little bit higher on the commodity index, Starbucks may have to raise their prices a little bit. Starbucks makes more money. Starbucks is then worth more. Things like that. It could be inverse too. Cocoa is cheaper, then Starbucks can actually keep their prices the same. They make a little bit more profit, but then again, they still make more money. The thing with the commodities index is it's just a little bit ahead of the S&P, right? So if we want to do an overlap and take a look at what it looks like, as you can see, they follow very closely along, but generally one will make a move quicker than the other. So right now, the commodities index, especially right around here, 30th November, was at its high, and then it started to retrace, right, before it was going up, right? And I think here we are seeing, if we take this off, or at least hide this, we see that the S&P index was going up, and now it looks like it could probably start to retrace as a result of the commodities index. Anyways, that's neither here nor there. Where was I going with this? I know I was going had to do with something with Bitcoin, and I can't remember exactly what it was. What I was going to look at. That was going to be on a different thing, and I forgot what it was. Anyways, maybe it'll come to me, maybe it won't. But let's talk about Ethereum as well. So Ethereum is also at a crucial moment. It is at a point to where it came to a key support and resistance level as well. So these are all coming to very crucial levels at the same time, right? So what the price that Ethereum hit, and I'm looking at the daily here, right? So if we look at the high, of what Ethereum hit was 636.53, right? So let's just actually put this on here exactly as it is, 636.53, and let's even put the text on it, 636.53, just so we know exactly where we're at, right? Now I want to see something because it looks like it came very close to this breaker, right? So let's see what the low of this green candle was. Low of this green candle is 637.65. Right? So it didn't touch it. It came very, very close to touching it, though. Less than $1 away from touching it. I would say that's close enough for it to be very, very influential on the price taking, or moving back. Or we could even take a look at this little low here, right? If we hate it when it does that. If we want to look at this one here, this probably could also be an influencer as well. The low here was 627.20, right? And this was 637.65. So now that we have hit that key area, if we want to look at the close where the price hasn't closed right above, I'm going to give it just a little bit of wiggle room right there. It did close below this, right? So both of these spiked up into here. So I'm going to say this was probably the influencer here, because it did touch, but it didn't close, right? So this may have been the influencer that caused the prices to not reverse, but at least bounce back. Comes up, hits this, bounce back. Now it's getting up closer and closer into these areas. Why is it getting closer and closer up into these areas? I'm going to revert back to the dollar, right? Because the dollar is also doing the same thing. It keeps getting closer and closer into these areas of support and resistance, and then backing off, right? So if you think the dollar doesn't have anything to do with crypto, I think you're going to have to say you're sadly mistaken, because they're both Bitcoin and Ethereum are coming into these areas. Now with XRP, I had no idea, because I don't think we've ever seen anything like this with XRP. We haven't. So XRP is on its own little world, and it's just I have no idea what XRP is doing. I don't think anybody does. And to be honest, I think it would be wise to stay away from XRP until we get a good handle on we know until we get a good idea to what we know it's doing. Your better bets are to look at Ethereum, look at Bitcoin. If you want to go for those little coins that they got on Coinbase and hope that they all make money someday, good luck. Everybody's doing that. Again, we can all throw millions and millions of dollars at it, and to be honest, I don't think it's really going to matter much. I think the coins that are well established are going to have the most impact, and the reason being is because the banks are going to be involved with these, right? The banks already have their hand in this. The banks know how to push and move and manipulate these. If you have 60,000 people putting in $20,000 worth of their money into Dogecoin, it's going to push it up 5 cents, right? If you have the Federal Reserve and you have the Bank of England and you have Deutsche Bank all putting in $16 trillion into Ethereum, that's going to make a little bit more of a push in price than the 20 people putting, or the 60 people putting in $20,000 into Dogecoin. Now, that being said, again, we're also at these resistance levels, right? So keep an eye out on these. We're at the end of the week. If anything, what I am thinking is that what I was thinking last week, especially now that the dollar has gotten deeper and deeper into these levels, we probably could see a reversal. If we see a reversal of the dollar, expect a reversal of both Bitcoin and Ethereum, at least a drop, right? And if we're going to see a drop, and if I'm a price action reader, I'm going to guess here, right? I'm going to say Ethereum is probably going to fall below this this drop here, right? And if I'm going to take a look at Bitcoin, we're probably going to see a drop below this drop here, right? And that's just drop number one, right? And then you could see the dollar start to fall again. If the dollar starts to fall, you could see this push up, and you could probably see it hit this, little spike here, and then it falls down. And the funny thing is that when this happens, right, let me just do a little illustration for you, right? You're gonna get some waves that are gonna do this, right? Probably not my best illustration, but whatever. It's gonna fall below here, right? And then we're gonna get one of these. Yeah, I'm gonna move it this way a little bit. Boom. Right, and then we're gonna get another one of these. Actually, you can't go. Well, I guess it could go up. But this is where you get people that go, oh my god, it's following a trend line. You better buy or you better sell because it's following a trend line. And then it does this and it reverses. And you go, oh my god, it's following a trend line. You better buy because it's following a trend line. And then it goes through the trend line. And then you get the other people that go, oh my god, it's following a trend line. You should sell because it's following a trend line. No, the reason it's following a trend line is because generally it has to do with price action on the left. And I kind of drew some of these on purpose because it hits levels like this. So if I was to draw a horizontal ray at this point right here, right, is because it hits an area like this, especially an area that is consolidated, right? That's generally when you see a bounce, or it has a top or something like that. And that's also why I drew that there, is because you'll see this come up and you'll see it hit this little price action here. Whenever you see it hit that, it knows not to go there again. It comes back. Price action is a hard topic to teach in one lesson, but that's a general gist of price action, right? It runs into things that are on the left side of the chart, right? That it recognizes, and then it moves away from it, and then whatever is back. Again, price action is just too much to teach in one lesson, right? So anyways, that's just a hypothetical of what you could see from Bitcoin if the dollar is to continue on. Now, that being said, I want to move on to some foreign action. Foreign action we go. Again, here's that theory that things go on a trend line basis. Everything's going on a trend line, and right now you got people looking at the British pound going, oh my god, it's breaking the trend line, it's about to break out, it's gonna break out. But I hate to tell them, I'm on a week-long chart here. If you break this down into a 4-hour chart, it is barely coming out of this, and then it came back down. And I guarantee you, there's people that are looking at this going, "Well, it just went outside this. Why isn't it doing that?" Well, it's because of what's happening on the left side of the chart. It has nothing to do with this trend line, right? Nothing is determined by trend lines. Everything has to do with price action, and price action has to do with what's on the left side of the chart. It broke a high. Why did it break a high? It's because people had either their buy stop set above there, right? So as soon as buy stops got there, it got triggered. People started buying, right? And generally when that happens, it also pulls back. Smart money does, because it knows that people have their buy stop set above that, which is exactly what happened. It went above it and then it pulled below. So it triggered the buy stops. People thinking it's going to go along, it pulled back behind, and which is also taking those people out, taking their money, right? If you don't know what I'm talking about, look into trading, learn how to set buy stops, learn how to set stop losses, because okay, so in short, this is what people did, right? So people did this, and this is I don't know where this came from. Nobody trades like this. It's because I have this on here. Wow, so I ran out of disk space on my computer, and it just stopped my video. Anyways, what I was trying to show you, and I kind of got on closer to it. Anyways, how people trade is I was trying to show you is that since this trend line was getting close to this area, and people thought it was going to take off, right? So they were thinking, oh yeah, as soon as it gets above this trend line, it's going to take off, right? Well, actually, the real reason why it came up and it didn't take off is because of this over here, right? So you have this high, right? And people have their buy stops set above this, right? Which is what this is right here. So let's say people have their buy stop set above this. I think it's going to take off and go to the moon, right? And then they have a very short stop loss set below that. So it goes up, it trigger those buy stops, right? And they set a very short stop loss. So instead of it actually going to the moon, the people with the money actually press it down and then take out, the money, right? So then what happens to that money that's lost? Well, it goes to the broker, and the broker goes to the person that's on the selling position. Who's on the selling position? The people that have the most money that can control that price to go down, which is going to be your, as earlier explained in this video, your commercial speculators like Deutsche Bank, like Bank of England, like the IMF, like the Fed. They're all involved in this. They're all involved in Bitcoin too, as I showed you. So anyways, I was starting to ramble toward the end of that video, and I'd said quite a few more things. Basically, what I just kind of wanted to show you was that we're all at a point right now to where we are all at a very, very interesting support and resistance area for all of these currencies, for the euro, for the pound, for Ethereum. Here's Ethereum here. If we go to the daily, yeah, we're on the daily on Ethereum, right? And if we go all the way back, here's some support and resistance areas, right? And it's all through here. For Bitcoin, we are at a very interesting support and resistance area for Bitcoin, because we are at the all-time high. Now the thing about this is, especially with Bitcoin, is that there's a very common trading element that comes out of something like this. It's what they call turtle soup, right? What turtle soup is a false breakout, right? So what that means is that everybody thinks that since it broke a high, that it's going to take off, right? And it's just gonna keep running, right? And it's never gonna come back. Well, even it took, it breaks the high, it dropped back down, and they think, oh, it's just making another run for it. Usually what happens, right, if that does happen, right, it took off. Actually, what I want to do, I kind of want to make this a hypothetical. I want to do this. I want to put this on both ends. I want to do a 4 hour really quick to see how that occurred. Right, so actually this will actually probably be a better analogy of it. So it took off, right? It made that high, and what's funny is that right after that high it went down here, right? So let's just do a little Fibonacci. If you don't know anything about Fibonacci, I suggest you look up what Fibonacci is. It's a very, very important tool. It generally shows you how far or how deep retracements get made. What's funny about this Fibonacci, now that I noticed it, is that the previous all-time high is at the 70.5% retracement level of the current Fibonacci of the new all-time high and the low that it previously made. What is a turtle soup? A turtle soup is that a false breakout, right? And then a retracement, and then it comes back usually to that 75%, and then it goes short. If I'm not mistaken, that is probably what is happening right now. This is a good example of turtle soup. If it goes short, if Bitcoin can continue to go short, this is going to be one of the biggest examples of turtle soup ever. In fact, I may be willing to wager on it. Maybe willing to whip up my phone right now and start putting a wager on it. Anyways, that's what I'm going to say. We're at a very critical level of all these different of levels. And they're all coinciding with the same, support and resistance levels. And I think that's something that we should all be aware of, especially for those that trade crypto. Understand that there are other players in this game. It's just not just little people like me and you that are putting in dollars here and there. There are large banks in this game. So that being said, I shall end this video, and I shall see you guys very, very soon. Be careful with your money. Study all you can. Don't just be somebody that just thinks that this is a fad. This is your money. Don't play around with it. It can be gone in an instant. So know what you're doing, right? And I'm just trying to out here give you guys information with as much information as I can that to give you informed decisions on what you can do with your money. Okay. So with that being said, I wish you all a good afternoon, good evening, good night, and to remember to always wear